It is because it's very, very rare, it's indestructible, and it's valuable and valued as a unit of measure across time and all cultures.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. Today we're joined by Stephen Flood, the CEO of GoldCore, one of the oldest gold and silver dealers in the market today that has turned over $1 billion in transactions and manages $300 million in assets for their clients. After Stephen received his degree at Portobello Business College in Dublin, Ireland, he began his career in finance. He held financial and trading positions in New York City before joining Goldman Sachs as a sales trader in equity derivatives. When he returned to Ireland to put his experience in trading, risk, and financial markets at Goldman to good use, his entrepreneurial drive led him to establish his own financial services firm at GoldCore, where they advise clients on gold and silver purchasing and storage. Stephen is married with 3 young, lively boys, and when he's not at work, he loves the outdoor life. He resides in the rural Dublin mountains and enjoys mountain walking, swimming, and biking with the family. Stephen, welcome to the show.
It's great to be here, Dave. Thanks for having me on.
Yeah, no, absolutely. I know it's a little bit late your time in Dublin, but why don't we kick things off with telling the audience who might not be familiar with you, tell us a little bit about yourself and how did your thesis around investing in gold, how did your journey start for you?
Well, I'd like to say it was all part of a plan, but it wasn't. It was accidental in some part. I always had an interest in financial technology and the markets, probably more from a nerdy tech perspective. I liked building things, building systems that did complicated calculations and did them very often, very, very safely. And I found my way to Wall Street back in the mid-90s. And I got a job with Bankers Trust, and they put me to work in a technology department, rolling out a new general ledger for their bank globally. So I got to see a lot of product groups, a lot of really, really experienced people, MDs. And my job was really to go in and kind of redesign their business, produce new reports to help them run their business with this new general ledger technology. And it was an incredible opening into the world of finance. So everything from Latin American markets to equity arbitrage, to bond trading, everything, mortgage-backed securities, that was a huge one. And so I just really loved the whole atmosphere in Wall Street. I loved the whole technology, the back office, the middle office. It was a really exciting place to be a young man in your 20s and enjoying life. Eventually, I found my way into the middle office and then the trading desk for Goldman Sachs after a number of years, and I absolutely loved that experience too. I got to see a new side to the business as well, risk management and trading and sales and hedging and everything like that, and the client side as well, which is really exciting. I then made my way back home to Ireland, and my old school friend Mark had actually set up GoldCore, and I joined a few months after he set it up. As a 50-50 partner. And I applied myself and everything I'd learned in Wall Street and helped build the systems and back end of the company. And we grew the business kind of one client at a time to become the best and largest bullion dealer in Ireland, one of the largest ones in the UK. And now we have our sights set on the United States. Mark actually sold his position in GoldCore 2 years ago. Just over 2 years ago, leaving me in control. And that was after 17 years working together, which was a big moment. And so I've built the team here now, and we've expanded greatly. And we've got a great reputation for client services and technology and execution and risk management. We're very careful about what we do and how we go about our business and our craft. and we are all about delivering value to the client and a great experience.
Great. And did you have any type of light bulb moment or anything in terms of your creating your wealth strategy and the vision, for yourself and your family that was driving you?
I suppose I think if you go back, when I was a very young lad, my family had quite a bit of money. We were quite wealthy on for Irish terms, and then we lost a lot of that money. So we grew up in big house and a lot of business, and then we lost everything due to economic circumstances. A lot of people lost a lot of money back in the 1980s. It was quite a difficult period of time if you weren't in Wall Street, that is. And so I saw kind of the ups, and then I saw the downs. And when I was when I was in my teens, my mother, Eilish, who's passed away now, God rest her soul, she had decided to go back into the workplace, and she set up her own business. And she really taught me an awful lot about setting up a business, the importance of capital, and to preserve capital and not to use capital to live or as an operational expense, and the difference between making capital work for you as opposed to living off your capital. And so I've always remembered that lesson, to protect capital and to be very careful about debt, to use it only properly and correctly, and never to confuse OPEX with CAPEX. And so I've taken those lessons into my life, and we've got a very, very strong company, a very strong balance sheet. We're very careful how we manage it, and our products and services, the income that comes from those is what we use to run our company, and we grow our balance sheet and our capex our capital all the time, and we're very careful about what we spend capital on, and we make sure we understand the return profile of that. And we get the most out of all the assets that we have in the company. So I would have learned that from her, and I've remembered that lesson ever since.
Oh, very important lesson. So, can you tell us a little bit about gold? I mean, let's just talk high level about gold, right? Before we get into what you guys are doing at GoldCore, how you're doing it differently, and everything. But I think we have a lot of high net worth entrepreneurs in our audience, and people, essentially we're talking about multiplying and protecting your wealth, right? So let's just talk a little bit of theory about gold. Maybe if you want to start with when Nixon, took us off of the gold standard, and how is gold really, the perspective on gold today, the recording of this in, late 2022, so much going on in the world and everything. So let's just kind of level set and understand, where does gold sit in the world today, and tell us a little bit about the background.
Yeah, it's a fascinating story. I think what people have to remember is gold is money. It is the only form of money that has stood the test of time. And the reason isn't because of some romantic connection to it as a metal. It is because it's very, very rare, it's indestructible, and it's valuable and valued as a unit of measure across time and all cultures. Every culture throughout time has valued gold as money. And really, I suppose what has happened in the last few hundred years, and in particular since 72, when the gold window was closed to the dollar, is that gold used to be at the very center of international commerce. And it was there because it held a position of trust. So it didn't matter what language you spoke or where you came from or what wars you were involved in. If you settled your account in gold, it was always acceptable by the other side. And so therefore it was the backbone to international monetary economics. And it still is today. So all central banks use gold as a backstop to their currency operations. And they do so not because, they like gold. They do so because in extreme circumstances, gold is acceptable by everybody. Now, what's happened recently is that gold has left the center of popular monetary economics. So it's not used in our currencies that we use today, the euro, the pound, and the dollar. It's on the sidelines. And that's okay as long as things are operating properly. Governments are not abusing their currency creation credentials, and people are being fairly represented and taxed fairly. But what's happened in the last 12 years or even 15 years is that that contract with the public has been broken by central bankers. And what they have done is, for political purposes, because it's not economic, there's no economic logic to it, they have decided to print money and debase currencies. And this is no small thing. It means that the house that you have measured in dollars, the value is not necessarily rising as fast as you might think, but the amount of dollars being printed and the amount of houses priced in those printed dollars is going up. And that means you create this illusion of asset growth and wealth creation, when in fact it's a two-card trick. Your monetary base is being printed and being debased relative to hard assets. So if you look at this statistically, and you look at if you go onto the debt clock, which is absolutely a fantastic resource, and I advise everyone to have a look at it and ponder what's in there. There's one part of it where it talks about the average industrial wage in the United States in the year 2000. And I think it's around maybe $34,000 or so. I could be wrong on that. But since then it's gone to around $38,000. So it's risen by about $4 to $6,000, which is not a lot in 22 years. But if you were to look at the average house price, that's gone up by 2 times, or 100% plus. I think it was around 180,000. Now it's around 400,000. And so if you look at the average car, it's gone up by about 2 or 3 times as well. But the average wage has not. This is real impoverishment for the average working man and woman out there. And again, it's not a natural thing. Gold, on the other hand, since 2000, was at around $250 or $300 an ounce around that time. It's now at $1,800. It's gone up, arguably, sixfold in that time. And that, again, is no accident. That's because it's not so much gold has gone up, but dollars have gone down, euros have gone down. All these fiat currencies, and that fiat means it's not backed by anything but the promise of a government, have been abused by central bankers. And they work for the politicians. They say that they're separate and they're independent. They are absolutely not independent. They are not separate. They work for the government of the day. They follow and they carry out their policies. And they're like a PR kind of group. And they print money. And once you start printing money, you cannot stop. It's like Pandora's box. You open it, there's no closing it. There's no going back. The only time you can do it is a reset or a new currency or a debasement and a new constitution that stops and prohibits this from happening. The thing about gold that everybody needs to remember, and James Turk is a very well-known person in the gold community. He's written extensively about this. He's the owner of Gold Money. It's a fantastic organization, a competitor of ours, but we acknowledge greatly his contribution. He's written about this in the past, and he talks about the U.S. Constitution and the important role that gold had, and the prohibition on the printing of money that was written into the Constitution back then, which has been reinterpreted recently. But what he said is that gold allows the individual to opt out of the system, to hand in their dollars, and in return receive gold. And gold is something that can't be printed. So what they do is they can actually remove themselves from the monetary system with gold and protect their after-tax income and savings from the printing press. That's its role in a portfolio. It allows you to opt out and take financial sovereignty as an individual so that you're not exposed to the criminality of money printing within our system today.
Yeah, well said. And, where do you really think we are today in terms of the money printing and the Fed? I mean, trying to, get a control over inflation right now. It seems runaway, right? And it is, like you say, it's so politicized, right? So, I mean, if they continue to raise interest rates, I mean, there's got to be some kind of ceiling to it, right?
Well, I mean, the Fed, they have created inflation. I can't understand why the people who created inflation are tasked with controlling it. It was never part of the script that they would just generate this level of inflation. And what they're doing is they're saying, don't give your workers pay rises. Try not to spend so much money. Keep your cash, and we'll print more to pay for whatever public spending that we deem politically expedient via the treasury market or buybacks in the open market of bonds. It's horrendous. I mean, so the little guy is asleep at the wheel. They're being misrepresented, and the Fed are the last people on earth to be trusted with the management of currencies, and central bankers, not just the Fed. It's right across the world. They're the last people on earth to be able to be trusted with this. Remember, the people who run these central banks, they are part of what's called regulatory capture. And that means is that these officials, once they do their stint in the central bank, they go out into the public, into the private sphere, and they get amazing jobs in these banks and investment fund managers, and they do speaking engagements, and they do their books, and they get paid a huge amount of money, and they enrich themselves. And the only way they get to do that is by playing the game with the market and those special interests. They're not elected. They're not held accountable by the public, and as such, their policies are, I would argue, very much against the interests of the public. So right now, the central bankers have created arguably $20 trillion of fresh money. They have created inflation. Inflation is a very dangerous situation. It erodes buying power. It doesn't take long before the man on the street to realize that his expenditure is higher than his income, and he doesn't go and shop. He doesn't go on holiday. He doesn't buy that car. He doesn't take on credit. He goes to ground. And when that happens, you get a kind of a doom loop where it feeds off itself, and nobody spends. People start losing jobs. Then you can't produce, and you have systemic damage to the economy. And their answer to this is to raise interest rates, to increase the burden on companies and households in terms of interest rates and debt. This is not the right answer. The right answer is to stop printing money, first and foremost, to wait for stabilization, and then to slowly cool the economy wherever possible. But these people, again, they've created this problem, and I'm not sure they should be trusted with the response.
Yeah, I heard that I believe Powell is worth about 100 million in net worth,
Yeah.
right? So he's likely not going to. He would be quite unpopular if he continues to raise interest rates, right? And him and his entire circle, right?
Yeah, I mean it's but also the biggest person at the party is the actual federal government. Their debt levels are extraordinary, and the thinking is that even though they want to raise interest rates to stop people spending money and taking on credit and cool the economy, what they will do is actually spur on a major bond crises within the U.S. government bond market. And right now, they're the least bad option internationally. But what if China was to launch their own international renminbi currency that didn't have the same kind of debt profile that the United States government has, and they backed it by gold, I mean, or oil, or some combination, or some commodity-backed currency? You could see very clearly how that creates a huge existential threat to the dollar and the hegemony of the dollar internationally, which is an extraordinary privilege. So I think we're in for some serious fireworks internationally. And if you're an emerging market or a European country and you're issuing debt, or you're buying your energy supplies of oil or gas, maybe you want to start paying for those in renminbi, where you know that they're more stable. There's not as much borrowing going on, and there's actually backed by gold in a vault. Maybe the argument for that is supported. So I think this needs to change fast, and there's a crisis brewing.
Yeah, completely agree. So, in terms of actually buying gold, right? I mean, what is the process to buy gold? And I know there's different forms of it. You could certainly buy it right, hard assets. You could also buy it as an ETF. So, help people in the audience really understand, the ways that you can actually purchase gold and some of the pros and cons of each scenario.
So we kind of break the gold buying public and companies into investors and speculators. Speculators are people who invest on a short-term cycle, who want to buy very cheaply, hold very cheaply, and sell very cheaply to get that pure exposure to the underlying. So they're not really worried about the method by which the exposure is given to them. So they're quite happy with proxy instruments such as derivative contracts, options contracts, futures contracts, things that may have a higher degree of counterparty risk, but are very cheap to operate. They're basically ledger entries, accounting entries. Now, investors are people who look at gold for other qualities, and that is they want to see gold as a safe haven investment that's part of a diversified portfolio, and they're looking at it for scenario risk purposes. So that's to say, so if there was a Lehman Brothers moment or something happened with the broader markets and they got locked up for some period of time, and they're exposed to this and their values were falling, they want to see something that would take the sting out of that correction. And that's exactly what physical bullion does, physical gold. Not necessarily ETF, not necessarily mining shares, but actual physical gold on a shelf, because its value comes from the fact that it's separated from the financial system. It's not connected to a large institution like BlackRock or one of these big custodians or fund managers. It's outside the financial system. It relies on nobody for its value, and that's key. So our clients would be very much in the second camp, and they own gold for that purpose. So what we do is basically we educate people as to their options. We have a strategy call with our clients. We go through their situation and figure out what would work for them. And if we're not a fit, we tell them. But if we are, we basically run them through their options. And those options might be various different formats, like 1 ounce coins, 1 ounce bars, larger bars, kilo bars. Good delivery bars are the ones you would have seen on James Bond movies, and The Italian Job, another great movie. And if you, depending on what their needs are, we will put together an investment plan for them. And then a big part of it is where they're going to store that gold. So we have vaults all over the world. So if the United States gets compromised, it'd be great to know that you have your gold in Switzerland, and you might have some in London or Singapore and spread around the world. And if one of those markets becomes compromised, you can then move your gold in advance. We kind of sit in it as a clearinghouse of ideas and risks. We have thousands of customers all over the world. They're always feeding information into us. We debate that, and then we feed it back out to our audience. So we do that through our own YouTube channel and our updates. So there's a constant dialogue back and forth. We're always kind of like we're the watchers on the wall. What we try to do is to always get segregated, allocated gold. That's really important, because it's not like you're buying into a general pool of gold. Typically with our storage program, you're going to have a particular bar on a shelf in Zurich or whatever vault you choose, and it has a serial number, and you can then go onto the GoldCore platform, see all your bars listed there real time, 24/7. We also then allow you to log into the vaulting company system independently of GoldCore, put in your account number, and there you will see all of your bars listed as per their records, what they see on the ground in that vault. In that way, you've got a 24/7 real-time reconciliation of your physical gold, and you know where it is. If you want to sell it, you can sell it to us. Most people do if they ever need to. They're always apologetic about it because it's the last thing they want to sell. Or you can sell it to another dealer. We'll just transfer it to wherever you want it, or you can take delivery of it as well. We do an annual check as well. We have our insurance certificates issued. We have auditors who go in and they check and test. They check and validate all of the bars that are in situ with what we say should be there, what the vault says should be there, and what they find to be there. And we spot check the bottom 50%, and we check the top 50% typically per vault. So it's very, very complete, very, very client friendly, and it's all about having that tangible asset in the portfolio. And this is really interesting. We hope that if you buy gold, it goes down in value. That's actually not a bad thing, because everything else you own is probably going up. The world as well, and everything's great. But if gold is going up in value, the other assets in your portfolio are probably suffering. So that's where its diversification benefits come in. It's really about spreading your risk around and having that scenario value come back to you should things get really hairy out there.
Yeah, and what would you say in terms of physical protocols that you have, security protocols that are in place at the vaults?
The vaults are ridiculously high security. They work with central banks in many cases, and they work with pillar banks. In some of our markets, they work with all the cash in transit. They would store famous paintings. diamonds. So they're all about the physical security, and they are in reinforced buildings in and sometimes in very uh, they're kind of hidden away in plain sight. They're kind of boring industrial buildings, but they're very, very high security. And in some markets, they have men with guns and women with guns, and they're insured out the wazoo as well. But the main thing is that the gold you store through GoldCore is not on our balance sheet, and it's not on the balance sheet of the vault. It's on your balance sheet as a customer. So it's not at risk to us or to the vault should we go out of business or anything else like that happens.
Okay, makes sense. And then in terms of countries where the vaults are actually located, right? I know there's some proponents to say that, you should maintain the physical gold in the country that, you're in. So if you're a U.S. citizen, you want to be in a vault in the U.S. What are your thoughts on that?
I think it's very much based on the personal preference of the individual. We have a lot of US clients who see the biggest risk they mean the federal government and state governments and the financial potential for risk and contagion within those markets. So they want their safe haven asset in the safest possible place. We're kind of agnostic on it. So we just give them a list of, I think we have 11 vaults around the world, and they choose which ones they want to go in. The most popular for us is Zurich in Switzerland, because that traditionally has the longest history of respecting people's assets and the rule of law. And they have quite a stable economic system there. They're one of the wealthiest countries in the world. But we also offer storage in the United States, and we also ship to people's houses and their businesses. So we think you should probably have a diversification within your holdings, have some at home, have it safe, don't tell anybody where it is, and then also have some within 1 or 2 days FedEx or UPS shipment, and then have some the bulk of it in like an international storage location. We also offer in Cayman Islands as well, and Utah.
Good to know. So let's talk about allocation then. That's interesting, right? So if you were to have some of your own, personal allocation, do you have any, guidelines or metrics or parameters, that you recommend to clients to say, hey, it would be good to have, say, 2% of your portfolio within your physical control in your house, in your own vault. And then let's say maybe you have another 5% positioned in gold in one of the vaults, or, what is your advice to clients?
I think it's important that you choose the right allocation for where you are in life. So maybe when you're later on in life, your tolerance for risk would reduce and you want to maintain your capital. So it's return of your capital, not return on your capital. I think it's important. When you're younger, maybe you can take more risks. Generally speaking, that's an approach to portfolio management. The old Wall Street adage says put 10% of your money into gold and hope it does not work. I mentioned that earlier because if it's going up, everything else is going down and vice versa. So I think that's a really good starting place. I think 10% of your net worth outside of your home, outside of your business, should be in precious metals. So, and I think it should be physical. It should be stored on a segregated, allocated basis would be the optimal. Some of it could be at home, depends on your personal security arrangements. I think the scenario where you wanted to have it at home is where the international and domestic monetary system has been compromised, or the banking system or the ATM machines aren't working. If you think about how much reliance you have on your phone, to open doors and get into your account and to move money, and you can pay for everything now. A lot of people don't use cash very often. And it's, I think in that case, having some physical form of money makes an awful lot of sense. So maybe you might have a month's worth of salary or what you use to live on in the form of gold at home, and maybe some cash as well would make sense.
Yeah, no, that definitely makes sense. And so how would people actually procure it? Let's say someone was interested in purchasing gold. What is really the process to work with you guys?
So what you need to do is we've been around for 20 years, would you believe? So in October, we're 20 years old. We're really proud of that reaching that milestone. And over those 20 years, we've kind of we have a number of rules around gold ownership and what you need to know to own gold. And what we did was we put them into a guide, and we put a special website together for people. So our website's goldcore.com, but the website we set up for this guide is goldintheusa.com. So it's like bornintheusa.com from Bruce Springsteen. So
Springsteen, sure.
goldintheusa.com. You can download a guide there. There's no salesy, cheap, salesy tricks or anything like that. It's just, God to honest advice on things you need to know when you're getting into the gold market for the first time. And you can go anywhere you want then. There's lots of really good dealers out there to buy. We think we're the best by far at what we do. We're very client centric. Essentially, though, for a client to become our customer, you would open up an account at goldcore.com, upload your identity documents, and then you can fund your account through a wire transfer or a credit card. And then we will have a strategy call if you want. If you don't want that, you can go straight through and purchase in a matter of minutes a kilo bar or whatever you need in Zurich or Singapore. It's very fast. We really pride ourselves on settling things quickly. So we actually get those bars on the shelf and those coins in place or shipped out the door quickly to our customers. Our customers really love us. They love our systems, our processes. We've been asking every customer trade to rate us, and we are beyond proud to say that we have a 4.9 out of 5-star rating across 3,000 reviews with our customers since 2012, which is really, really great. And I think it puts us in it's one of the best in the business of what we do. We're very client-centric. But I'd say pick up the phone, download that guide maybe, read up on it. I would be very, very careful about doing business with any bullion dealers that tend to advertise on television a lot. You tend to find that they might bait and switch you, where they advertise something that's too good to be true, and then they bounce you into something that's really expensive. And so be very careful that you're not buying very expensive gold products that have a very big premium. Premiums should be low and reasonable. And if you're being bounced into something like a rare coin where you're not qualified to really tell the difference and you're kind of trusting them, you want to be very careful of what the resale value of that is. So there are some unscrupulous people out there. You have to be careful of them. So do your research. Don't get bounced into things. None of the people at GoldCore get paid a sales commission to make a sale. We are rewarded on the basis of how our company does generally and how happy our customers are. And we review that as a team every month. And we're very, very careful to maintain that relationship with our clients. Most of our business comes from word of mouth. And I think that says it all.
Great. So in wrapping up, Stephen, what would you say if you could give just one piece of advice to our listeners about how they could accelerate their wealth trajectory or wealth advice that you would have? What would it be?
So my belief is that you need to become expert in some area that really interests you as a person, something that you can become valued and people will be willing to pay a premium for. And that means doing your homework, getting educated, focusing in on what that is, whatever that is, that expertise is. And then you want to learn the business of business in terms of letting as many people know that that's what you do. And that you can provide value and added value in that area. Once you do that, people will crawl over hot coals to deal with you because they know they're going to get exactly what they pay for and that you are an honest broker and you're expert in what you do. And then your reputation will carry your business forward. But always make it as easy as possible for people to deal with you in business, like a great website, great communications, great pricing, easy onboarding, all these things. But become expert in whatever that is. So we're expert in the provision of precious metals. I don't think there's any dealer out there that can even come close to what we do. And the outcome for our clients is always very, very good. And I think that's how we build our wealth.
Great. If people want to reach out to you and learn more about you or anything, what is the best place?
Well, on LinkedIn, they can link in with me there. I'm always available to speak with people and give advice. Any entrepreneurs starting out, I will give my time and help whenever I can. You can go on to goldcore.com and contact us there, and I will get back in touch with you. Absolutely, no problem at all.
Great. Thanks so much for your time, Stephen. Really enjoyed the conversation and definitely added a lot of value to investors. I know there's a lot to think about, but it's definitely something to consider in your portfolio.
Absolutely. And thank you so much for the opportunity to speak with you and everybody else.